Do you lend on turnkey properties? Well, first off, let's make sure we're on the same page of the definition of turnkey. The concept of turnkey is a property that is actually fixed up and in most cases has tenants in there that are paying rent. So the issue when you run into financing a turnkey property is there's no way to increase the value. The value's already been increased by having work done to the property and by putting a tenant in the property as well. So if you're saying, hey, do you do turnkey properties? What you're asking me is if we'll lend on a property where there's a tenant in there, where all the work has been done. And the situation on this is we could, but it really wouldn't make sense. Because when you're dealing with a turnkey property, you're gonna wanna be going after a DSCR loan, a debt service coverage ratio loan, or you're gonna be wanting to go to just a traditional bank that's gonna have a 30-year fixed loan. So yes, we do have options in the debt service coverage ratio, which means we're not going after your personal qualifications or credit or any of those things. We're simply going off the cash flow of the property to determine, and yes, those loans can be up to 30 years, but they are gonna be higher than if you're credit qualified and you have the income and you can go to Chase or Bank of America or Wells Fargo and actually get a 30-year fixed loan. The problem that most real estate investors run into is they get more properties or their income doesn't justify having it, and they want to use the income from the property in order for them to qualify for it. And that's where the DSCR, it is going to be a little bit higher rate, but well worth it because you're getting it a loan that you wouldn't otherwise be able to get. So can we fund on turnkey properties? If you have excellent credit and you have the income to support that, you're gonna wanna go to a traditional bank to get that financing. It'll be the best pricing. But if you don't and you need to use the income from the property, that's where a debt service coverage ratio loan comes in. And yes, we do have affiliates that we work with on debt service coverage ratios where we can look to get those completed for you, which would be a 30-year fixed. As far as getting hard money, a short-term hard money loan on a property that's already fixed up and already has a tenant in there really doesn't make any sense, because when we lend on hard money, we typically lend on the after repaired value of the property. What's the property going to be worth once it's actually fixed up? Well, the reality is this property is already fixed up, so now we're dealing with an as-is value. So if we're dealing with an as-is value, there's no additional work that can be done to increase the value of the property. There's no value add that can be done to that property. So then the price you're purchasing the property for is really the value of the property. It's not what you may think an appraisal will come in for. So then your purchase price is the value because you're not able to increase the value. And therefore, any type of a loan on that would be for 25% less than what you're actually buying the property for. Now, if you do need money for a quick situation and the property's fixed up and it's turnkey, we do have those options available. Those are going to be called bridge loans. Those are going to be a short-term bridge loan where you need it for a certain situation. But in most of those cases, you're going to have to be coming in with 20% of your own money because there's no way to have the property increase in value because the work has already been done to the property. Remember, when we're dealing with investing, what we're trying to do is we're trying to negotiate great deals, and we're also trying to value add to the property to then increase the value of that property, where we're using the after repaired value rather than the as is value of the property. When we're dealing with turnkey properties, the purchase price is the value of the property is really what's happening there. And you're going to want to get long-term financing, either working through DSCR loans, debt service coverage ratio, which we can talk about with our loan advisors, or by going to a traditional bank if you have the credit, the income to qualify for that, which lots of times that's just simply not the case. And that's where the debt service coverage ratio becomes so important for real estate investors.